My name is Monica Twinar, and I'm the Associate Director of the Center for Sustainable Global Enterprise at the S.C. Johnson College of Business at Cornell. We believe businesses have a vital role to play in solving social and environmental issues through innovation, market development, and entrepreneurship. We focus on a variety of applied research on critical issues facing businesses, as well as sustainability curriculum and programs for full-time students and executives. We are excited to offer today's conversation about B corporations in collaboration with Dion Caldani, co-founder of Capitalism and the Social Good Group. And I'm going to turn it over to Dion. Thanks for joining us.
Thank you, Monica. Good afternoon and a big welcome to all who have taken the time to attend this presentation, which I hope you'll find engaging and informative. I'm Dion Caldani, the co-founder and CEO of the CSG Group, a consulting collaborative advising corporate leaders and mission-driven entrepreneurs to formulate their policies and measure their output. I co-founded the company to help redefine business practices leading to a stakeholder economy, as the B Corp movement exemplifies. Monica and Mark, directors of Cornell's Center for Global Sustainable Enterprise, I cannot thank you enough for generously co-sponsoring and hosting this event. My sincere and special gratitude to our featured speaker, professor and author Chris Marquis, for his encouraging support. To Vicki Benjamin, Gideon Cohn, and Tracy Shirashi, many thanks for your participation to share your perspectives about the topic. There are many other colleagues and friends that have been supportive of my endeavor, but since this is not the Oscars, I will stop now and introduce Vicente Escriva, my co-founder, the moderator and expert in responsible corporate policies, who will lead the discussion. Thank you.
Thank you, Dan. And thank you to the whole Cornell team that helped us put this together. It's much appreciated. And to those out in the audience, we appreciate you joining us for this conversation. We'll be focusing on B Corps and the value of certification. My name is Vicente Escriva. I'm a responsible business practice consultant. And I'm honored to be joined by our inspiring guests. First, we have Christopher Marquis, the Samuel C. Johnson Professor in Sustainable Global Enterprise at Cornell, and author of Better Business, a chronicle of B Corp's journey in rethinking how business is done. Vicki Benjamin, the co-founder and CEO of Carner Blue Capital, a biodiversity-centered investment firm. Gideon, it is B certified. Gideon Cohn, co-founder and principal of Good Capital Investment Group, a sustainably focused wealth management firm, also B certified. And Tracy Shirachi, the CEO of The Mark, a woman-led data evaluation firm that is currently considering B certification. So thank you all for joining us. Now let's give each of the panelists a moment to tell you a bit more about themselves and explain what a B Corp is from their perspective in a sentence or two. Shall we start with Chris?
Sure thing. Thank you so much, Vicente. Dion, thank you. Monica, thank you very much. So just in short, a B Corp is a company whose social and environmental performance has been certified by the nonprofit B Lab. You know, you may think about certifications like Fair Trade, Organic, LEED. So the B Corp one is the only one that holistically looks at the entire company across workers, consumers, community, environment, and governance, and actually, you know, certifies so that it is actually a good, sustainable, equitable business. A couple examples of B Corps folks might know, things like Patagonia, Seventh Generation, Ben & Jerry's. You know, recently there's been a number of them entering the public market. So you might have seen the news, Warby Parker went public recently, Allbirds went public recently. Both of those are B Corps, as well as many other recently IPO'd companies.
All right, thank you so much. Vicki?
Yes, good morning and thank you all. My name is Vicki Benjamin, and as Chris said, I'm the co-founder of Carner Blue Capital, a firm socially focused on environmental stewardship, and the preservation of biodiversity. When we co-founded and started the firm about 5 years ago, one of the first things we did was look into B Corp certification. I'm a veteran from Calvert Investments, arguably one of the oldest and largest socially responsible investment firms, and recognized that the way to found a company and to really ground it foundationally is to put forth the B Corp certification and the discipline it offers in helping to balance purpose and profit. So we signed up for B Corp certification and went through the 3 steps as one of the first foundational movements we made with setting up the company. It credentialized us to our investors, and it also helped us establish a discipline framework regarding the environment and the purpose of our company and leading our company into the future. Thank you.
Thank you so much, Vicki. Gideon, why don't you go next?
Yeah, hi everyone. I'm Gideon. Thanks eCornell and CSG Group for having us on today. My name is Gideon Cohn, and I'm the principal and co-founder of Good Capital Investment Group, which is a sustainable wealth management firm and a B Corp. And a sustainable wealth management firm means that in addition to creating financial returns for our clients, we also create environmental and social returns within our portfolios. A lot of the companies we invest in actually model the practices of B corporations. And for us, being a B Corp, we really feel like we're in this transition in the business community from what was shareholder economics coined by Milton Friedman in the 70s into a more a stakeholder economy where companies are incorporating a lot of different factors into their business models. So incorporating how they treat their employees or their supply chains, or just a whole factors that Chris went into when a company goes through B Corp certification. So for us, it's being part of this transition from a not sustainable economy into a sustainable economy.
Thank you. And last but certainly not least, Tracy.
Hi, everyone. Thank you for having me today. Just want to let you know that as an evaluation and research company that focuses on measuring social outcomes, B Corps are really important to us. I consider it to be the integrity of the organization, and as a former director of PricewaterhouseCoopers, formerly in the accounting field, just understanding frameworks and measurement is really important in performance metrics. And it's really, to us, not only balancing purpose and profit, but the integrity of an organization and the willingness to be unafraid to share what's going on within a company. And I think for a lot of consumers, that's of interest. So that's one thing that we really want to highlight. So thank you for having us.
Absolutely. A pleasure to have you here. So this is a question for anyone to answer. B Corps are somewhat well known, they're becoming more well known. Who would you say is the target audience for B Corp? Who is that certification aimed at being recognized by?
I can start.
Vicki?
I think that finance is the lever through which society can motivate and facilitate change with corporate stakeholders. And so when you think about finance, which is banking, investments, insurance, you want to make sure that those organizations recognize that B Corps fundamentally, by their organizational structure, are managing their environmental, their social, and governance risks. So they are absolutely evidencing a commitment to the future and what their investors and what their financiers should be looking for to mitigate risk and ensure future profitability and organizational effectiveness. And so I believe that the finance community, along with their investors and insurers and bank and lenders, need to be really looking at who are B Corps in the public and private space, because there's a commitment by management.
I'll add, I mean, I think the finance is a very important audience. And I think it's one of the ones where there's been the most amount of traction, actually. If you look at all of the, major VC companies from Kleiner Perkins, Sequoia, New Enterprise Associates, I mean, they all have B Corps in their portfolios. Like I mentioned, there's a lot of B Corps that are going public right now. So I think that, one audience as finance, and, as Vicki mentioned, that's a really important lever for change. Other audiences, I think employees, as I was doing the research for my book, so many of the companies told me that upwards of 25% of the people that are applying to them, when asked like on the application form, why are you applying here? Over 25+% say because you're a B Corp. People nowadays, millennials, Gen Z, want to work for a company that has a purpose, that treats its employees well, is sustainable, and we're seeing that. A third sort of audience, so to speak, is consumers. And I think this is the one that has not taken off maybe as quickly as maybe for investors or for employees. I think there's a lot of work around this. And I think with many of the larger B Corps that exist that are putting the B Corp logo on their products, that it's becoming more aware in the consumer realm. But that's one that I think is very important, but is lagging a bit behind investors and employees.
And I was just going to say, to add to both what Vicki and Chris are saying, I really think it is everyone, primarily because of what Chris is saying around consumers. It's as human beings, knowing that a company is invested, right? There's a validation that the B Corp logo has when you buy a product. And it's to know that a company is invested in people and community, right? Society and welfare, right? I think is really important to the individual. And that validation, that integrity behind that organization. So I think it's not only transparency and accountability, but it's also integrity. Like what you guys are noting is it's the employees, it's the consumer, it's the management team, it's everybody as a whole. So just wanted to add that piece to it.
All right. Thank you so much. Gideon?
Yeah, I'd like to just echo Tracy. We are all human beings living on planet Earth, and we are all affected by how corporations behave or not behave. So when the pandemic started and everyone was not commuting to work or not going to the office, emissions only went down by a fraction. So the real culprits are corporations. So everyone has a real vested interest in corporations acting with the environment in mind. And so, I mean, everyone on this planet is a stakeholder in this movement.
All right. Thank you so much. Let's dive a little bit more into the technical side of what it actually means to be certified. So two-part question. The second part's actually coming from the audience. And if you have questions out there, please feel free to put them in the chat. They are, we love audience questions. They're real concerns by people who actually might want to go through this. So we are happy to answer them. What is the difference between B certification and B incorporation? And question from the audience, does becoming a B Corp open up opportunities for grant funding that would not be available for other structures? So I'll open it up to anyone.
I'll start. So B corporations are corporations, so they're not like, foundations or nonprofits where they're able to get sort of funding from donors. I would say, though, that there are a lot of other sort of impact investing type of entities that may be more interested in investing in the B Corps. You asked about B Corp and B Incorporation. I would use slightly different terms. There's a type, a corporate form called a benefit corporation. So this is, something that's recognized around the world, throughout the U.S. states, in Italy, a bunch of places, France, British Columbia, a bunch of places in South America, also recently Rwanda. And this is a corporate form like a C corporation, S corporation, LLC. But the difference is that it actually has, within the Articles of Incorporation, a purpose beyond just delivering value to shareholders. And then secondly, companies should be accountable for that purpose. So that's a type of company. So if you're founding a company, you can go on your state's, company registration page, and more than likely, you can see benefit corporation, and those are the provisions. The B Corporation, as I noted, it is a certified entity by a third-party nonprofit certification form. So these are, one is a certification, B Corp, one is a type of company, benefit corp.
Maybe to clarify that a little too, because I know we've looked at that, and one thing we got confused is the IRS has a designation of like C Corp or S Corp, right? And it uses kind of the same language, so it's often confusing for people. It's not necessary that there's another letter that the IRS has added per se, right? So just to clarify, it's not in the same context of C Corp, S Corp, LLC, where you're choosing your legal entity. So I think
for the B Corp, but a benefit corp is a separate legal entity.
Yeah, so I think Chris explained it well, just in terms of clarification and potential confusion, because I know we had the similar confusion around it too.
And I think just to add, a benefit corp is a state incorporation requirement. So it's only, I think, noticed in 35 of the 50 states. So.
Right. But I'd say that all incorporation is via the state. So,
right.
If someone's in Delaware, most of them actually companies are in Delaware, and I think there's close to 40 now. And again, a number of places around the world, in 4 different continents, actually, this corporate form exists.
I think one thing that we really need to mention is the fact that the B Corp status has an independent organization that reviews you and credentializes you. So there's a lot of times that you can sign up to do something. Everyone does that. And then there's no one checking that you're actually following along with what you've signed up to do, or you've guaranteed to do. And I think with the B Corp status, that accreditation, if you will, is very meaningful, and gives my client base, which is investors, it's a differentiator, because in the investment world, there's only a little over 100 registered investment advisors that are B Corps. So especially when you think about the ESG world and socially responsible investing world, what is a better token of my commitment to ESG principles and the fact that the company is run with that as a foundational element?
100%, Vicki. And also, when we launched, we thought, as an investment firm, we're looking to place capital with firms that have ESG values. And who would we be as a firm if we didn't represent those values also? So we wanted to take our own firm through the B Corp certification, which is an ESG stress test. I mean, it is a rigorous process that took us from March 2020 until January 2020 to get approved and certified. And to go through that process, it's rigorous to go through, and if many different sections about our environmental impact, how we treat employees, our governance in general, how we're structured. They ask for every single one of our suppliers, so we have to list the suppliers, how they operate. Are they B Corp? I mean, it's a pretty intense process. And now that we have this certification, now that we are B Corp certified, when I see another company that's B certified, I'm blown away that they spent that much time going through that process and getting the certification and remaining certified. So it is this instant accreditation or validation when I see a B Corp either on a website or on a shampoo bottle that these companies went through the time to care about all the different ESG items and remain certified.
And it's a testament to especially public companies, because you and I, Gideon, are smaller companies. I mean, I implemented this like step 1. So in the very beginning, I think it's a little bit easier. But when you look at public companies like Denon and Allbirds and Patagonia that have millions and millions, billions of revenue, and they're implementing these certifications and these standards, in Danon's case, across subsidiaries, it's a movement, and it's exciting, and you really your hat is off to them, because it's a lot of work, but it's a real commitment evidence is a real commitment by management.
Thank you so much. So we're coming from this conversation, we're getting a lot of questions from the audience about how does B Corp fulfill ESG goals? How does it relate to the SDGs, Sustainable Development Goals? Whatever metrics does it fill? And could it substitute for a GRI or a SASB report? Does anyone have anything to weigh in there?
Sure, I can start, and I'm sure that many of the other commenters will have other points as well. So, I mean, I see the B impact assessment, the thing I mentioned that's workers, community, consumers, governance, environment, is basically an ESG benchmarking and assessment tool. So I think you can see there's a lot of overlap. It is essentially ESG. And I think that, other tools, as you mentioned, like SASB or GRI, those are reporting frameworks more. I think as, both Vicki and Gideon mentioned, this is actually a tool that companies go through and they're assessed on it by a third party. So, I don't believe that SASB or GRI is actually, is assessing them as in detail. So I think that is one important reason why this is a really useful ESG exercise. The second one, in relation to the SDGs, actually, the B impact assessment is synced up with the SDGs. So companies can see, what SDGs are actually sort of most suited for their business that they can have the biggest impact on. And then they can also see how they are doing against those. So I think, it's great to have, I think, a global framework like the SDGs, but those were not actually sort of articulated for companies. They were articulated for governments and societies like, the UN's constituencies are. So this tool is helpful in a way for companies to see where they can make a contribution to the SDGs.
I also think what's challenging about right now is that a lot of it's still unfolding, right? So there's a lot of different governing bodies. And I think Chris pointed out there's a difference between like reporting versus what I'll call and consider validation, right? Individuals need validation about the integrity of the company and the reporting structures, and people are looking for a standard, right? And so what's challenging right now is there's a lot of different governing bodies and different parties that are part of this. But I think what's important is like with the B certification, it's that validation. Like when you see a product, I think Gideon mentioned it, like a shampoo product, right? And you see the logo on the back of the shampoo, as a consumer and as a human being, you're like, this is a company that took the time to make sure that this was important to them and wanted to demonstrate it to individuals, right? So it's also that validation and that affirmation of the significance and importance of that contribution to what I'll say is society, right? So I think that's important to distinguish between also kind of ESG reporting with those common language. And I know in our experience in working with both like academic, nonprofit, government, and for-profit, all four of these different sectors, there's a lot of convergence going on in partnership there, right? And it's all trying to understand each other's languages and terminology and perspectives, which is also going on, which makes for a confusing time. So I think it's just watching to see how things unfold and who emerges as that leader, and how do we establish as a society, as a world, what those standards will be from a performance standpoint.
I also think that exactly what Chris said about the other items being GRI, especially being reporting and SASB mechanisms. And here what we have is, this is the company itself certifying to specific criteria. Management, mostly the CEOs, are certifying that this is how we run the business. And then B Corp evaluates that against all of the other B Corps and rates us. And then every 3 years, and then sometimes I think with public companies, they do site visits. So I don't think you're going to see reporting mechanisms doing site visits to see exactly how a company's being run. So you have a buy-in by management, this is how I'm running the company, and then you have an independent assessment benchmarking it, and then you have actual follow-up of audits. It really is a completely different level of attestation and accountability.
Yeah, the B Corp certification is voluntary. No one mandated us to go out and be B Corp. It's something that we all wanted to do to prove that we are an ESG firm. Whereas the other reportings, whether it's ISS or MSCI or whatever rating companies on the public markets, that's being done to every single public equity firm out there because that's they're selling data. And that's, yeah, it's not, the firm has no choice whether they participate in that, where B Corp is a choice.
And often doesn't review the rating that it's assigned.
Sure.
By MS. And just anecdotally, MSCI and Sustainalytics, unless a company has a sustainability report, will often not rate them. So you'll see companies like Beyond Meat or First Solar, first mover in solar panels, not having a rating or having a negative rating because they're young and they don't have a sustainability report. So sometimes using those reporting mechanisms isn't actually very indicative of ESG criteria.
And a follow-up question on that, does going through the B certification, does gathering that data help you in other types of reporting? So if you wanted to do a SASB or you wanted to put together a sustainability report, does going through this process help you to do that?
100%. It's such a wonderful self-reflection of a corporation. And we put together an impact report every year, and we modeled some of the parts of our impact report from the B Corp certification process. It was just it was such a wonderful exercise to go through and see how we are acting and how we behave as a company. And really, and then from there, we actually tweaked our investment process of what we want to look for in other companies that we want to place capital with.
I should also mention this. It actually goes beyond just sort of ESG sustainability to, I think, broader management as well. And I agree. I mean, many of the companies I've talked to says this is really helpful in ways that it feeds into the sustainability report. But the reason why I titled the book that you kindly mentioned at the outset, Vincente, was Better Business, is because so many of the companies that I interviewed in the research for the book said, we got into this because of our social and environmental impact. We wanted that, assessed. However, we came out of this a better business because actually the tool helps our management more broadly. And to that point, actually Danone, which Vicki had mentioned, which is Danone's North America branch, which is the largest B Corp in the world, and Danone, Paris-based $36 billion company, has committed to become a B Corp by 2030 or 2025. They actually, I learned when I did the case study, I did a written case study on their North American conversion, that they've actually oriented their entire internal KPI system on the B impact assessment. So, it's not just about being able to produce better and easier sustainability reports, but actually a framework and set of measures and tools to actually manage the business overall.
Absolutely.
Well, I think what you guys are also highlighting is its contribution to the entire enterprise value of an organization, right? And you're also not, and that isn't just only like financial metrics, but there's a non-financial component that requires measurement that people are interested in, right? And holistically, those things together, right, equal the value of an organization. That's important to acknowledge too. So I think it's not just only like focusing on the reporting mechanism itself, but especially like holistically everything together.
To follow up on that, Tracy, as someone who does evaluation and assessment of data collection, do you have any critiques of the B Corp impact assessment, or any thoughts on what they could do better, or challenges for them?
I think the biggest thing that we're always interested in is how it's measured, right? And being able to assess like metrics and measurement, like performance measurement, right? And how parties compare to each other and how far or how close are they to specific outcomes that collectively everybody is going to benefit from. So I've, started the assessment. I think what's interesting is a lot of it is related to like certain policies of corporate governance, right? What policies do we have in place for our people? What practices do we have in place? And it's really encouraging to see that, because it's really, I think, taking that reflection point and evaluating yourself internally, but also it's a good reflection, I think, externally of, hey, what are things that we can do better? The one piece that I am always interested in seeing is how people define performance, not only just in terms of ratings, like someone's a 1 or a 10 or an A or a Z, but really like how do they compare to each other, and really getting into the kind of the nitty gritty. And that's probably like the former accountant in me, right? I used to work for the Big Four, and have really experienced more the reporting side of things, right? From a audit and tax perspective. So I always say like I'm now on the other side, right? Measuring social impact and working with a lot of my colleagues who are focused on research. And I think it's a really great time. Like, I think we have to see it as a great opportunity right now for a lot of companies, including ourselves, to really put our money where our mouth is, right? And really not only live and breathe what it is we want in terms of improving society and community. And that's what we're used as a tool as an evaluation company, but looking internally ourselves to really ensure that we're in an organization that also has the same integrity and can demonstrate that too. So that's just my thoughts in terms of like the process and kind of what I'm always looking for around who's going to be the leader to define everything, right? Who's going to put us all on the same page and the same reporting mechanisms and the same reporting practices. So, and for all of us to feel comfortable with that, right? I think it's acknowledging that there's risk management involved when you're managing an organization, and it's scary to have that transparency, right? To know that other people's know everything about you and what's going on within your organization, but there's also freedom in that. There's also, I think, empowerment around that too. And so it just depends on how you approach it. And I think acknowledgement is the first spot. Like, you don't need to be perfect or do everything right. There are mistakes that we as human beings make, but I think it's acknowledging what we can do better. And this is the conduit, hopefully, for that.
Wonderful.
I think Tracy mentions a lot of great points. I mean, one of which is, I mean, it's still early days in this social and environmental impact assessment. And I think that, we've mentioned a bunch of these sort of acronyms that are floating around. And I think, over time, maybe there'll be more convergence into a more common set of measures. But as it is now, I mean, I think another thing I really like that Tracy said is that, it's not going to be perfect. I think it's important to actually try to actually measure and assess and develop a framework. And I think, the B impact assessment has gone through, I think, 6 iterations over the 15 or so years. They just came out with the 6th one. And every year, there's a rigorous process that's gone through to really help refine those measures and have them less about actually, just the policies, like, okay, do you have like a carbon neutral or, 2030 goal, to actually, what is your carbon output, benchmarked against your, sort of peers. So I think that, there is work that's being done, and a lot more that needs to be done to help sort of refine these measures to make them, higher impact for all companies and stakeholders.
Right. And to kind of continue that thought, for Gideon and Vicki, what has been the biggest challenge of certifying? And you've gone through this process, it's very rigorous. What could be done better, and what's been a challenge for you? And are there any disclosures that make you uncomfortable?
I can start. We got certified. My organization came around in 2017, and we started the certification process, much like when we signed the UN Principles of Responsible Investing. It was one of the first things that we started on as a check the box as to how we wanted to manage and run the company. So from our perspective, it was foundational, and I keep on using that word, as to how we managed our employees, our environmental footprint, and our governance. We updated our charter and our operating agreement to include the necessary legal wording regarding environment and people and the balance of purpose and profit. And so we're coming up again. It took a bit to get certified, and I think the challenge at that part was less for us because we were just brand new, but we did have documentation requirements. So we had to document certain things that might not have been the first thing that I would have documented. But now, as we're coming up on being recertified, and we look at, I've been looking at, much like I think Chris mentioned or Gideon, it's kind of a tickler of, I looked at it just recently and said, wow, these are things that we can do a little bit better, or we're already doing better. So I use it as a framework to see how my company is evolving and how much the standards have changed. It was okay to do it this way. So for instance, one example is you get a lot of credit for work from home versus having owning separate real estate or leasing real estate or even having hoteling space. There's an encouragement to reduce our carbon footprint. And I thought, well, that is one thing that we're looking at, and reducing business travel, another. So I use it as a tickler to move forward and get my numbers up. And so the only thing that might have been a challenge, much like a lot of these, is the first part is documentation. So I guess I've used up mine a lot of time, but it's great.
Yeah, well, we launched in 2018 and started our certification process in 2020. So it wasn't top of mind first. It was being a profitable company first, and then quickly turned into again the reflection of, we wanted to reflect what we wanted to see in our investments. The biggest thing was time management. I mean, it takes dedication to the certification process to go through it. And it's very easy to go through the B Lab assessment and maybe not complete every section, or just kind of get lost in the details. But actually, the biggest challenge for me was not going down rabbit holes. So some of the questions were, I mean, I'll give you an example. Like, what is your corporate donations? What percentage of revenue are you donating? And I never really stopped to think about that. Of course, I want to be donating some of my profits, and then I have to go draft a donation pledge and how much of the profits we want to donate. So each question had these things that we had to think about as business owners that maybe we wanted to incorporate, maybe we didn't want to incorporate. And that can be, I mean, that's a lot of time, especially for a new firm to think about these and then put in processes that make you accountable to the B Lab assessment. It was super easy to just get lost in a rabbit hole.
If I could add something real quick, because I think, people have mentioned, particularly, Gideon and Vicki, who both their companies are B Corp certified, how difficult it is. And that's true. It is a truly very rigorous process. And I think both of their discussions sort of illustrated, they learn a lot. And this is, in some ways, creates a really solid foundation for their company with these, sort of various policies, procedures. Just anecdotally, Larry Fink, who's the CEO founder of BlackRock, which is the largest private investor, I believe, in the world, recommends his companies all go through like ESG measurement and processes for this very reason, because, they learn about their company and they learn about how to manage it better. It reduces risk. So, it's rigorous and creates a good foundation. But I also want to say that these tools are used by many, many more companies that are not B Corp certified than are, because of these reasons, that it actually helps you manage the company better. Many financial investors actually have their companies go through it. So there's a bank in Canada, BDC Bank, called Business Development Bank of Canada, has its potential lendees go through this. A bank in Colombia, Bank of Colombia, one of the largest banks in that country, has its potential lendees go through this. Many venture capital companies use this as part of their due diligence. So, and I've heard many stories of companies using this as ways to just sort of learn and improve without actually becoming a B Corp. So I just want to mention that. I'm not sure who all is on the call, but don't think that, you have to use this in a way that it's going to take tons of time. I would just recommend getting started with it and seeing how it goes and what you learn and how much of value it is. And, maybe it isn't, but, there's literally 150,000 companies are using this to measure what matters, so to speak, whereas there's only about 4,000 B Corps.
I'll tack on to that. Oh, sorry, go ahead.
Sorry, go ahead.
I was just going to ask Chris, do you see with Warby Parker and Allbirds will be public? I think they just filed September 20th.
Yep.
Do you see that momentum for newly public companies? And I mean, for me, that's great news, right? Those are both very recent.
It's huge news. And I mean, I would say that this sort of pandemic year, in some ways, a silver lining is that, it's really the time that these social impact companies have come to the fore in the public markets. So by my count, there's about 15 in the last year, B Corps that have gone public, from, Lemonade, which was, I think, the best performing IPO of 2020. It's an online insurance company. Vital Farms, a, sort of pasture-raised egg and dairy company. App Harvest, 60-acre indoor farm in Kentucky. Martha Stewart is on the board. I don't think she cares about the social impact, but she cares about the fact that this company produces amazing tasting, high quality vegetables. As you mentioned, Warby Parker, Allbirds, Coursera, the online education company, $6 billion IPO. Many companies that are already public are converting to benefit corporations, which you've already discussed. And all this has been in this past year. Before I think Lemonade's IPO, which was in June or July 2020, there was only one public B Corp, and now there's about 15. So I agree 100%, Vicki. This is a tremendous new wave of them, and there's hundreds of B Corps in the venture capital portfolios and impact investor portfolios, and those folks are going to want exits. So there's a pipeline of B Corps. I see a very large coming wave beyond just this 15 in the last year.
And I think what I was going to add is, I think when we say like it's arduous to go through the process, I think we're looking at it more of a like compliance exercise, right? Versus if we look at it bigger picture, which is what you're highlighting, our companies are being rewarded financially for doing the right thing, right? Capital is moving in the direction by which people believe it should move, right? Based on what is happening, right? Productivity or the results that are being achieved. So when you highlight all these companies, I think people, it's acknowledging, like, as human beings, right? What are we attracted to? And as shareholders ourselves, right? So I think it's, as I started going through the assessment ourselves, we actually didn't see it as being very difficult, because if we're living and breathing it already, it's almost like you're just acknowledging that you're already doing some of these things. And then to, I think, both Vicki and Gideon's point, you're also realizing, oh, wait a minute, I don't have a pledge, even though I give money to nonprofits, right? Okay, now I should get a pledge, right? So it's almost like it's not as hard as we make it to be if we're already living and breathing these things, right? And I think that's really what everyone's highlighting is, if employees and managers and as people were doing these things, it actually won't be as hard. It just takes time, which I know is always a challenge for all of us. Like, there's never enough time. So it's how we prioritize that. But I think what everyone's highlighting is some of these companies that looked at the bigger picture are benefiting from committing that time, and they're benefiting financially, so be it, right? Because of what they've been doing.
There's a lot of talk about investment in this conversation, and from the questions that we're getting from the audience. How competitively do B Corps attract institutional investors? How much has that landscape changed?
So my sense, I mean, I've talked to a number of, and when you say institutions, I mean, I think, most companies that become a B Corp do so before they're public. And so the institutions thereby would be like private equity venture capital companies, more asset management type companies, pension funds, et cetera, or investing in these companies as public firms. And I think, maybe some of the examples of, like, there's a company, Viva Systems, which is an online cloud computing company that changed from a regular C Corp to a benefit corp. And there's been a number of examples of that where they went and they talked to their institutional investors and said, we want to make this change. And then in all of the examples that I know of, over 99% investor vote, most of which is institutions, vote to approve this change. I think that these companies are really popular in the sort of VC world because of how well performing they are. I think because they have a very solid management foundation. Even some more traditional institutional sort of venture capital companies end up converting to B Corps themselves after doing some investing in B Corps. For instance, one LA-based, mostly real estate focused VC firm called Fifth Wall. So they had invested in both Allbirds and Cotopaxi, which is a company sort of like Patagonia that has sort of outdoor wear, very socially and environmentally responsive. They were investor in those two companies, which are B Corps, and their founders ended up saying, we believe in all this ourselves. We may be a traditional VC firm, but we should actually convert we should become a B Corp as well. So I think that there is really, at this point, pretty widespread support of these ideas among institutional investors. One other quick anecdote. So the one B Corp before this recent 1 year of 15 is a company, Laureate, and they were online education company, have sort of educational firms throughout the world, I think about 20 countries now. Their biggest investor was KKR, and you might be familiar with those of you who are a little older. They were sort of led the RJR Reynolds hostile takeover. There's a book, I'm blanking on the name of the book, Barbarians at the Gate, which was actually about, these were the most rigorous market-oriented investors, and called Barbarians at the Gate, storming RJR Nabisco in a hostile takeover. And they actually are the lead investor in Laureate in our support of this move. So there's, I think, pretty strong evidence that institutional investors from VCPE to a variety of asset managers are supportive.
Well,
Chris,
sorry, go ahead, Vicki.
Just one point. Don't you think, as more company, I think there's probably institutional investors aren't involved that much because there's not that many public companies right now.
Right.
And as soon as it starts, I think it's going to be self-fulfilling, because as soon as the finance industry says, oh, I can just use a B Corp certification, I don't have to do a lot of other metrics and evaluation as far as lending, financing, investment decisions, I think that you're going to see this become much more popular. And we're lucky that we have Danone is leading the way by having B Corp certifications at the subsidiary level. So they're showing, hey, it can be done. It's not easy. It may take a couple of years, but it can be done. And I think it's really exciting. But I think that's why, there's just not a lot of public B Corps. So we're not having a lot of institutions looking at them yet.
Yeah, that's exactly right. I mean, I sort of talked mostly about the VC and PE, which are institutions, but not traditional sort of public market institutions. And I'd just add a little bit more on the Danone case. So they actually, because of their commitment, ended up issuing, I think, some ESG pegged bonds.
Mm-hmm.
I don't
just
remember
recently,
the details.
Yes.
Yeah, exactly. So they, if they meet a variety of ESG metrics, the bond payout will vary in some way. I can't actually remember the details, but this was seen as another way to get sort of these large institutions more comfortable and aware of these issues.
Well, to go along with that, Vicki and Gideon, you're both in the financial space. How much has it impacted the way that you look at your investments? Do you look for B certification?
I mean, B certification would be great to see in all of our investments, but as Vicki and Chris alluded to, there's just not that many out there on the public markets, and we invest primarily in the public markets. But yeah, the B Corp is a great ESG stress test and sustainability stress test, but it doesn't, when you're looking at a firm from an investment standpoint, there are other metrics that we need to look at also in terms of economic mode or profitability or just other financial metrics. And the B Corp, it helps with the ESG, but it's not a full encompassing metric gatherer.
Just to echo that, we run a mutual fund, socially responsible mutual fund centered around biodiversity and nature, and we evaluate all these industries on key performance indicators, and it would be great if we include it as one, but there's not that many companies that have it, so there's not a lot of choices there, so I'm looking forward, and that's why I keep on asking Chris, does he see momentum and a lot more of public investments that we can make?
So one of the critiques of B Corps in the public market is the question of who you're responsible to. Chris, can you you talk about it in your book, can you get a little bit into shareholder primacy and where this plays into this whole conversation?
Sure, yeah, it's a really interesting question. So this idea of shareholder primacy is, whereby companies' primary responsibility is to deliver mostly short-term value to their shareholders. And this is something that, actually through the 1980s and 90s, U.S. law has sort of enshrined. It's why this benefit corporation form is important. I'd also say that, things like CEO compensation are also very much aligned. So very much aligned with the short-term stock performance. So this idea of taking care of broader stakeholders is really, I think, in many ways the mission of this broader movement. And I'll say, if you look at in these public market firms, the offering documents, the S1, which is what companies have to file when they want to go public, most of them actually report that this benefit corporation structure that they're in is potentially a risk to shareholders because they're not bound to profit maximize, and they may actually make longer term decisions, which they feel will be in the long-term interest of all stakeholders, including shareholders. But this might be sort of a short-term issue that for some investors. And I think it's important to disclose that. And I think many investors, given some of the best performing IPOs have been these companies, I think that people are seeing the value. Interestingly enough, again, we've made this distinction between benefit corporation, the legal form, and B Corp, the certified entity. What most of these S1s that I've seen do actually is mention the B Corp certification as a risk on the opposite side. So if the company were to lose its B Corp certification, this would affect the culture, its ability to attract employees. So actually would lead to a negative financial situation. So in some ways, these are at least presented to the investors as sort of opposite sides of the coin. One, they won't profit maximize. B, if they lose it, it'll sort of have detrimental cultural effects.
Chris, don't you think, though, that companies that are run in accordance with the B Corp principles will eventually, in the long run or medium term, especially with all of the risks related to environmental, social, and governance, including changes in tax, carbon tax, et cetera, that those will actually affect, that not running them in accordance with those principles, is that eventually going to affect their bottom line, and that shareholder profitability and maximization will occur a little further down the path?
Yeah, 100% agree. And I think this is why, Larry Fink, who manages, $600 trillion, something like that, says the same thing, because it's sort of, he's investing for the longer term. He's not, about this, quarterly jumps or some of these hedge funds that, pressure companies. I mean, it's sort of taking a long-term perspective. I think most investors.
And that's a challenge, because you need to socialize with investors. And I found that the investing horizon in what I'm doing is not a year. I mean, it is a 2 to 5 year investment horizon. And so that our companies, which are considered the best at managing their nature dependencies and risks, will be able to prove the investment hypothesis and the operational hypothesis in a couple of years or maybe sooner, depending on what industry they're in and what risks they're facing.
Well, and I think what's interesting you guys are highlighting too, as I'm listening to you, right, is you're giving a lot of examples of like VC and PE and what they're doing, right? But you also have the public markets and what they're doing, right? So like in December, I believe it was this last December, NASDAQ had issued a public relations article specifically around consideration of how to measure diversity, equity, inclusion, and potentially considering that as a metric, right, by which to report for publicly listed, with those that are listed on the NASDAQ, right?
Right.
So there's an evolution going side by side where the reporting structure will influence a lot of the public companies, right? And that will be, that evolution of that process will occur through primarily auditors and financial statements and public disclosures as it relates to public listings, right?
We're seeing it bear out right now as a case study in Facebook.
Exactly.
There's a lot of SRO
I mean,
firms.
there's some things going on in tandem, right? Aside from the private, like more agile is what I would say. Venture capital and private equity are able to be a little bit more agile, but the public companies are also having to adapt to it too.
Yeah.
Just a quick point, the SEC actually, the current chair of the SEC, Gary Gensler, has come out in support of ESG reporting by companies, things like carbon, things like diversity. I don't think they've converged on what actually those would be, but both environmental and social metrics are things that I think are on the horizon for all companies that are public in the US.
That's great.
I just want to touch really quickly on executive compensation, because that leads to a lot of problems. And right now the structure is that executives get compensated every quarter from stock returns, as Chris mentioned, which leads to, how do we boost the stock at the detriment of employees or at the detriment of the environment? And we're seeing a shift now. Jamie Dimon, the CEO of JP Morgan Chase, he accepted a compensation package that was on 10 years of stock returns and not one quarter. So we're seeing a shift from the executive side that, what we do for a long-term horizon in a company is actually probably most beneficial for me as an individual. So, but I think that in order to have real meaningful change in the public markets, the executive compensation change needs to be more long horizoned.
Yeah. And people don't want to talk about that, unfortunately. People want to talk a lot about stakeholders, and they just gloss over the employee. They want to keep making their buku bucks. So I appreciate you mentioning that. I think that's a really good point.
Thank you. So we're just about out of time. So as we wrap up, if we could just go around and get everyone's final thoughts on where they think B corporations are heading and where you would like them to go. So we'll start with Chris.
Sure. Well, first of all, thanks so much for having this. It's been really fun. Really enjoyed talking to all of you. I think that if you're a company, take a look online. I think some of the resources were shared. Give it a go. Take a half an hour and start filling it out and see what happens. See what you learn. I think for the general public and consumers, it's important where you spend your money. And I think B Corp is one way to see which companies are sustainable and equitable. But there's other things, local companies you may know. Each of us every day can in some way sort of vote with our dollars to make the world a better place. And I encourage everyone to really think about that as they're making their purchases.
Thank you. Vicki?
I can't stress enough that I think B Corp certification is a great tool to use to help manage your business. And it'll give, as momentum continues to grow, it's going to be outliers that aren't B Corps. So if you're starting a business or you're thinking about starting a business, download the assessment tool, evaluate it, and as the pressure comes, more and more companies will join and get that certification, and you won't have to worry about the principles because you'll have the B Corp accreditation.
Gideon?
Yeah, actually, I read a quote last night which kind of falls into this, that Emerson said that institutions are an elongated shadow of a man. So there are some really great companies out there led by good people trying to do the best, not only for their company, but for the world around them. So if you can support them with your consumer dollars or investment dollars, please utilize the B Corp directory.
Great, thank you. And Tracy?
I just want to close this by saying we're excited to go through the process. I know for us as a company, going through and starting the assessment. So like a lot of the listeners or viewers, you know, we're going through that process right now as a company, and just excited at this opportunity and the community that we all share, I think, similar values and envision the world in a similar way. So it's just exciting to go through it.
All right. Thank you so much. It's been really wonderful having you all. And for the CNSG group, we appreciate you joining us. And thanks again to Cornell for hosting this. And I hope you have a great day.
Thank you.
Thank you.
Thank you all.